Welcome to this edition of Ethical Sustainable Investment News and Analysis to Profit By. I'm Ron Robbins, an ethical investing pioneer for over 40 years, quoted in the Wall Street Journal, MarketWatch, the Globe and Mail, and numerous other media, and founder of the highly respected global ethical sustainable investing information website, Investing for the Soul. And please listen to my disclaimer statement at the end of this podcast. Now enjoy this podcast. Hello, Ron Robbins here. Welcome to my podcast episode 158, published on August 22nd, 2025, titled Sustainable Stock Picks for August 2025. Before I begin, I'd like to inform you that I'm adjusting the release schedule for these podcasts. So for the foreseeable future, this podcast will be released on the last Friday of every month. Hence, my next podcast will be on September 26th. This podcast is presented by Investing for the Soul. Investingforthesoul.com is your go-to site for vital global ethical and sustainable investing mentoring, news, commentary, information, and resources. Remember that you can find a full transcript and links to content, including stock symbols and bonus material, on this episode's podcast page at investingforthesoul.com/podcasts. Also, a reminder, I do not evaluate any of the stocks or funds mentioned in these podcasts, and I don't receive any compensation from anyone covered in these podcasts. Furthermore, I will reveal any investments I have in the investments mentioned herein. I have a great crop of 12 articles for you in this podcast. The first article is by someone who has been on this podcast a few times. His name is Fahim Tahir, and his article is titled 12 Best Ethical Companies to Invest in 2025. It's found on Fool.com. The methodology underlying his stock selection is fascinating and impressive. Here's some of what he has to say about it and brief quotes on each of his picks. To curate our list of the 12 best ethical companies to invest in 2025, we used Ethisphere's list of world's most ethical companies. Ethisphere's list relies on its ethics quotient, which evaluates companies based on their ethics, compliance, governance, and corporate responsibility across multiple criteria. We then used InsiderMonkey's database to assess hedge fund sentiment on the shortlisted stocks. Finally, we ranked the stocks in ascending order based on the number of hedge funds holding stakes in the respective stocks as of Q1 2025. Our research has shown that we can outperform the market by imitating the top stock picks of the best hedge funds. Starting with 12, Autodesk Inc., number of hedge funds 82. On July 23rd, Loop Capital started coverage on Autodesk with a hold rating, setting a $320 price target. Autodesk is a global 3D design, engineering, construction, and entertainment software company, offers cutting-edge tools for everything from infrastructure to animation. 11. Workday Inc., hedge funds 85. On July 14, 2025, Workday was selected by Seattle University as its partner, serving global corporations, universities, and now government entities. Workday offers AI-driven enterprise cloud applications, particularly for finance, HR, and student segments. 10. Eaton Corporation plc, hedge funds 85. Investor confidence is growing in Eaton Corporation, with KeyBank increasing its price target on the company from $355 to $410. The company has paid dividends every year since 1923. By designing and delivering electrical, hydraulic, and mechanical solutions, Eaton Corporation has made itself a leader in the intelligent power management solutions market, helping industries improve efficiency, safety, and sustainability. 9. Lam Research Corporation, hedge funds 91. On July 21, 2025, UBS increased its price target on Lam Research Corporation from $95 to $120, maintaining a buy rating. Lam Research Corporation, serving major foundries and integrated device manufacturers worldwide, manufactures advanced semiconductor processing equipment for chip production. 8. Intel Corporation, hedge funds 91. On July 24, 2025, Intel Corporation reported its financial performance for Q2. Surprising Wall Street with a revenue of $12.86 billion that beat estimates of $11.92 billion. However, the company reported a net loss of $2.9 billion. Intel Corporation designs and manufactures computing products for tech companies worldwide. 7. Micron Technology, Inc., hedge funds 96. With rapid growth acceleration in the space economy, Micron Technology announced the launch of the industry's highest density, radiation-tolerant SLC NAND flash memory on July 22, 2025. This memory chip is designed to survive space's harsh environment marked by radiation, extreme temperatures, and vacuum pressure. Micron Technology is the only major US-based memory maker delivering advanced DRAM, NAND, and NOR solutions with its Micron and Crucial brands. 6. Pfizer Inc., hedge funds 99. On July 24, 2025, Pfizer finalized the global licensing agreement with 3S Bio Inc., leveraging 3S Bio's proprietary CLF2 platform. This innovative treatment enhances Pfizer's oncology pipeline and solidifies its competitive edge in cancer research. Operating globally, Pfizer discovers, develops, and sells biopharmaceuticals. 5. ServiceNow Inc., hedge funds 106. On July 23, 2025, ServiceNow reported financial results for Q2, beating guidance across all areas. On the same day as the earnings release, Jefferies increased its price target on ServiceNow from $1,025 to $1,150, maintaining a buy rating. Stifel also increased its target to $1,200 on the same day. With its Now platform, ServiceNow offers a cloud-based solution for digital workflows globally. 4. Eli Lilly and Company, hedge funds 119. On July 18th, Leerink Partners maintained its buy rating on the company, citing growth potential through the GLP-1 receptor agonist, GLP-1RA space. On the same day, Jefferies also maintained a buy rating, setting its price target at $1,057. Operating globally, Eli Lilly and Company discovers, develops, and markets human pharmaceuticals. 3. Salesforce Inc. Hedge funds 140. Salesforce is demonstrating a mixed performance as of the time of writing. Previously, on July 16, 2025, Citizens JMP maintained a market outperform rating on Salesforce with a price target of $430, citing future growth driven by the company's AI and cloud services. Offering Agentforce, Data Cloud, Salesforce Starter, and Tableau, Salesforce provides customer relationship management, technology, bridging companies and customers. 2. MasterCard Incorporated. Hedge funds 155. Ahead of its Q2 earnings, Truist decreased its price target on MasterCard Incorporated from $640 to $612, maintaining a buy rating, reflecting its continued confidence in the stock. MasterCard Incorporated offers transaction processing and other related products and services. And number 1 is Visa Inc. Hedge funds 165. Truist Securities decreased its price target on Visa from $400 to $397, maintaining a buy rating. Despite the price target reduction and recent underperformance of the fintech sector, the firm cited optimism regarding the company's strong fundamentals and promising outlook for the fintech sector. Visa is a global payment technology company offering credit, debit, and prepaid card products, and VisaNet, a transaction processing network. End quotes. The second feature article is titled Best Sustainable Companies to Own, 2025 edition. It's by Amelia Fredlich and Leslie P. Norton, and seen on Morningstar.com. Note, follow the article link on this podcast episode's webpage to all 83 companies that Morningstar considers the best 2025 sustainable companies. The article also highlights the 3 companies below. Here's some brief quotes from the authors. Morningstar's research finds that the biggest ESG risk is in energy and utilities, with the smallest in technology and real estate. Morningstar Sustainalytics measures this with the Sustainalytics ESG risk rating. We didn't include valuations for these 83 companies. Rather, we focused on the criteria that set a company up for success in the long term. So while not all these names can be considered a buy today, this can serve as a great watch list. Data source, Morningstar Direct, as of June 30th, 2025. 1. Relax. UK-based Relax, that's RELX, is a global provider of business information, analytics, and decision-making tools for professionals across industries. The firm generates revenue mainly by creating and selling access to curated information databases, analytics, and journals. Morningstar senior analyst Rob Hales assigns RELX a wide Morningstar Economic Moat rating. Sustainalytics gives RELX an ESG risk management rating of strong. 2 is Danaher. Danaher focuses primarily on manufacturing scientific instruments and consumables in the life science and diagnostic industries. The firm aims to accelerate core growth at acquired companies, including Sativa, formerly GE Biopharma, by making research and development and marketing-related investments. Sustainalytics gives Danaher an ESG risk management rating of strong. Morningstar senior analyst Julie Udebach assigns Danaher a wide economic moat. 3. Keysight Technologies. Keysight Technologies is the leader in communications testing and measurement solutions. We think it has the strongest and broadest communications testing capabilities in the market across hardware, software, and services. Its wide moat rating, according to Morningstar senior analyst William Kerwin, owes to intangible assets in the design of test and measurement equipment and software and switching costs for its portfolio of solutions. Because of Keysight's strong ESG reporting and oversight of ESG issues, Sustainalytics gives the company an ESG risk management rating of strong. End quotes. The last article I'm covering is by Abhishek Bhattacharjee for Zacks and found on NASDAQ.com. It's titled Top Wind Energy Stocks That Would Drive Long-Term Portfolio Growth. Here are some quotes from his article. As clean energy technologies evolve, they are set to capitalize on growth opportunities and provide lucrative investment prospects. Our wind energy screen helps identify stocks with high growth potential in this dynamic sector. 1. Arcosa is a well-known provider of infrastructure-related products and services that serve the energy, construction, and transportation markets. The company's engineered structures business provides wind towers, utility structures, and telecommunication structures for wind power generation, electricity transmission and distribution, and wireless communication markets. This Zacks rank number 2 by company's engineered structures business continues to witness strong demand for its wind towers and engineered structures. 2. Dominion Energy, together with its subsidiaries, produces and transports energy in the United States. The company has a portfolio of nearly 30,300 megawatts of electric generating capacity, 10,600 miles of electric transmission lines, and 79,700 miles of electric distribution lines. By 2035, the Zacks ranked number 2 company also intends to make zero and low-emitting resources accountable for 99% of its electric generation. 3. Brookfield Renewable Partners owns and operates several renewable power generating facilities. The company's power generating portfolio is comprised of hydroelectric generating, wind facilities, and natural gas-fired plants. It has operations in the United States, Canada, and Brazil. The Zacks ranked number 2 company's exposure in wind and utility-scale solar generation sectors has been enabling it to capitalize on the growing opportunities across the renewable power sectors with high cash margins and minimum fuel input cost. 4. DTE Energy is a diversified energy company that develops and manages energy-related businesses and services. The company has been investing steadily to enhance its renewable generation assets. Notably, this Zacks rank number 3 hold company plans to reduce carbon emissions of its electrical utility operations by 65% in 2028, 85% in 2032, and 90% by 2040 from the 2005 level. End quotes. Now I have more articles with sustainable stock and bond picks for August 2025 from around the world. 1. Title: 3 Stocks for the Global Energy Transition on Finamiz by Blair Cooper. 2. Title: Unlocking Sustainable Income: Why the CIBC's Sustainable Canadian Core Plus Bond ETF is a must-have for resilient portfolios on ainvest.com by Wesley Park. 3. Title: Kroger, a top socially responsible dividend stock with 2% yield on nasdaq.com by BNK Invest. 4. Title: Biblically Aligned Fixed Income: The Case for the Inspire Corporate Bond Impact ESG ETF in a Shifting Market Environment on ainvest.com by Isaac Lane. 5. Title: Green Bonds and Sustainable Income Generation: Assessing Van Eck Green Bond ETF as a Monthly Distribution Play in a Decarbonizing World on ainvest.com again by Samuel Reed. And 6. Title: Enphase Energy, a best-in-class balance sheet position to thrive as rates decline on seekingalpha.com by Gustavo Ribeiro. And 7. Title: Baker Hughes named top socially responsible dividend stock with 2.1% yield on ainvest.com. 8. Title: This company could be the Amazon of AI infrastructure on Fool.com by Harsh Chauhan. And number 9. Title: 11 Best Alternative Energy Stocks to Buy Right Now on InsiderMonkey.com by Neha Gupta. Again, go to my webpage for this podcast to get all the links. These are my top news stories with their stock and fund tips for this podcast. Sustainable stock picks for August 2025. Please click the like and subscribe buttons wherever you download or listen to this podcast. That helps bring these podcasts to others like you. And please click the share buttons to share this podcast with your friends and family. Let's promote ethical and sustainable investing as a force for hope and prosperity in these deeply troubled times. Contact me if you have any questions. Thank you for listening, and as I mentioned earlier, the release schedule for these podcasts is changing. So, for the foreseeable future, this podcast will be released on the last Friday of every month. So my next podcast will be on September 26th. See you then. Bye for now. Learn how to create a simple portfolio reflecting your personal values by taking my 1-hour tutorial. Go to investingforthesoul.com/podcasts and click the link in the right-hand column for my DIY Ethical Sustainable Investing Pays tutorial. Now, I'll mention in the podcast if I have any direct interest or holdings in companies or securities I'm talking about. Furthermore, any news, opinions, analysis, or other information offered by myself, as well as references and information to or from other external sources in this podcast, is provided as general market information and should not be relied upon and thus does not constitute investment advice. Investors should consult their own licensed investment professional before making investments. Also, I will not accept liability for any loss or damage, including without limitation any loss of profit, which may arise directly or indirectly from use of or reliance on information in this podcast. Do contact me at ronr@investingforthesoul.com. Signing off, this is Ron Robbins.